What's going on, guys? Bexio back, and today we are going to look at China because they are having a little bit of financial problems with their real estate market, how it's operating, and that could have global impacts as this kind of Lehman Brothers moment for China. We know right now China's economy is basically on fire and they're on the verge of collapse. Because of this real estate type of Ponzi scheme they've been running, which has grown to a value of over $9 trillion, and it could be even more than that. And basically, this is happening because of the way Chinese homes are built and home developers build their houses. And it's through some sort of pre-sale type of method where the developer will get funding and pre-sale money, so they will sell the houses to people already who want houses. They will pay the mortgage as they build these new houses. And then after they build probably about half of the houses, they go and use the half they built, use as collateral, collect more pre-sale money, more money from people wanting mortgages to buy homes, and move on to the next project with that money from the first project. So you can see how it's a little Ponzi-esque and could create pretty big problems. And this leaves China in a pretty difficult spot with investors unhappy because their money is seemingly being evaporated in this scheme, and people who just wanted to buy homes and live in them don't have their houses and are paying a mortgage for a house that's not built yet. Another massive problem that comes with this is the income to loan ratio, which is kind of what you base what people can buy off of how much they make. So if you are in the US, that ratio is around 4.7x. So if you made $50,000, you could get a loan or get approved for a loan of like 235,000, maybe 250 max, and that's what your loan is. That's what you could shop around to buy a house with. But in China, that's a little bit different. They have a ridiculous multiple that could be 20 to 35x your income. And that is obviously, you can start to see maybe some problems shaping up there. And these numbers are 2015 pre-pandemic numbers before people kind of went crazy into real estate and the values exploded. So if you just take those numbers, if you made $50,000, the same amount in China, you could get approved for a loan of $1 million on the low end or $1.75 million on the high end. So again, it's pretty clear that this could be a massive problem as you have an income of $50,000 but have $1 million house. It's probably not affordable. So as China stares down these problems and is about to have a Lehman Brothers moment and collapse, and their real estate market is about to be absolutely devastated, that is supposed to be the safest way to invest your money in China. It's a very, very big thing to own real estate, and it basically is like a guarantee, and it's very societal in China that like owning a house is an amazing thing for you to do, even more than it is kind of in the US here. But we could see this is China's flashpoint as global investors on edge as China faces a $9.2 trillion flashpoint. So they're real estate market causing global problems already. People worried. We kind of saw this with the Evergrande stuff when Evergrande kind of went under and defaulted. That was a major property developer in China, and it seems like we're going to see a lot more of those start to come forward. Like this says right here, in the past year, 28 of the top 100 China property developers defaulted or asked their debt holders for extension. Not a good sign, 28. So 28% of your top property developers are defaulting or asking for extensions. The debt could be held by international players. It could be global debt. People in the US or funds in the US could have those bonds as debt. And obviously, that means there's impacts for the US. There'd be impacts for the entire world if these companies don't pay their debts. And now we can see again, home buyers are starting to refuse to pay mortgage installments on over 100 stalled projects and becoming a potential flashpoint, which makes sense. Why are you going to pay for a house and pay for a mortgage when the house isn't even built yet? It doesn't make sense. And then on top of that, your money that you're paying this mortgage for is going to these developers who are using that money to build other projects, to get other people's money to build other projects. So you can see when this comes toppling down, this could be a massive problem with massive implications and lots of people involved and lots of money involved. And it does seem like it could be a Lehman Brothers moment for China. and that is nothing anybody wants to see. And then just looking at global impacts, we see Chinese home buyers across 22 cities are refusing to pay their mortgages. So there's a start right there. China's bank have detailed $312 million of loans at risk to the increasing number of homebuyers refusing to pay mortgages on unfinished homes. And there are now fears of potential spillover into the wider financial sector. We can see how this is a spillover where those bonds that these developers have that they issued out to big hedge funds, even in the US, even in China, that those bonds and debt was supposed to be super secure, no problems will ever happen, and now all of a sudden they're not secure at all. You might not get your money back at all, and they are no longer kind of a good investment. And we're seeing things like this even play out in China today, where we've seen the protests at Chinese banks where people just want their money out, can't get their money out, being held hostage, the army coming in to get rid of the people protesting. It's a crazy scene in China, and all of it kind of stemming from the problems with real estate and the problems with this basic Ponzi scheme that was going on for developers in building houses. But China does have a plan for their real estate market, just as in the US we had bailouts and people weren't happy about that. China has its own bailout planned. See, China plans a real estate fund worth up to $44 billion for the distressed sector. Right here, China will launch a real estate fund to help property developers resolve a crippling debt crisis, aiming for a war chest of up to $44 billion in a bid to restore confidence in the industry, according to a state bank official with direct knowledge of the matter. So, this is still a pretty big problem, as when you have these types of bailouts, the sector got insanely overheated, had massive problems, didn't do business the right way, and now people are suffering, and it's on the brink of a global crisis. But the government is here to bail you out and take care of you, so nobody really learns anything. This is just kind of enforcing that these developers can just do it again because the government will always be there to bail you out. So although the bailout is meant to kind of save people and help people, it really does reinforce to these developers and businessmen there that they can get away with this. They can continue doing this and running these kinds of schemes because at the end of the day, if it collapses, if and when it collapses, the government will come out and bail you out because there'll be lots of people suffering and it'll be in their best interest to do it. So nobody learns anything. The people make tons of money doing the scheme and can just continue doing it without really worrying. And to make things even worse for China and the global impact that this could have is that this real estate market in China accounts for almost 30% of their GDP, and that has been run on basically a Ponzi scheme the whole time. And with it collapsing, that could be 30% wiped out, which is why the bailout is needed in the government's eyes. You can't allow your economy to be destroyed by 30%, and when this is the world's second largest economy. So they're going to try and save it at any means necessary. And we can take one last look at the Chinese consumer confidence, and you see it's just absolutely plummeted, and people are just not very confident. It's something where if you saw this playing out, there's no way to really make it confident. Even if the government's coming out and bailing everything out, that's not going to really raise your confidence. It's probably going to take a while to get confidence back, and this is pretty apparent of what's going on, where people are extremely worried, and it's the lowest it's been in a long time. And now we could ask ourselves, is this going to turn into a global problem, or will it stay in China? That's the question on everybody's mind. Only time will tell, and we'll have to sit and wait to see how it plays out. If the China bailout works and everything kind of goes back to normal and they continue operating this as a Ponzi again for another 10, 20 years until they need another bailout, or is it bailout not going to be enough? Are there still going to be problems? Is it going to stay in China, or is it going to make its way out into the rest of the world? That's going to do it for this video, guys. As always, don't forget to smash the like button and subscribe. We're on the road to 1,000 subscribers. I'll see you guys in my next